Welcome, everybody. My name is Galia Aharoni Schmidt. I am the lead attorney at Aharoni Business Law. We're a law firm based out of Oakland, California, and we help small businesses with all of their startup needs, including formations and employment issues and independent contractors and trademarks and contracts, all that stuff. So since the pandemic started, I have been getting a lot of questions from my clients about insurance. And so I wanted to invite my good friend David here to talk with us today. Before I introduce David, though, just a little bit of the admin of the webinar. If you have questions, you're welcome to send them over in the Q&A box or the chat box. We'll keep an eye on both of them, and we'll try to answer them throughout. So go ahead and pop on and have your questions throughout, and we'll also have some time at the end. So this will be recorded. If you want to sign up for the newsletter that I will share information about at the end, then that's a good way to get informed when it's live. But you can also it'll be on our YouTube page and our website and things like that. So David Forsyth is joining me today from UIB Insurance, and we're really excited to have him here today. We send our clients to David all the time because one thing that makes him different from every other insurance broker I've ever met is just he really has this amazing commitment to education of his clients, and he's got this incredible personalized service and creates relationships with people that I just haven't seen other people do. Another perk is that he's an independent broker, so he has the freedom to work with his clients to select the right solutions for you and not just kind of funnel you into some pre-prescribed solutions. And maybe most important of all, he is a great guy to grab a beer with, and I just love hanging out with him, and I think you will too. So without further ado, I will welcome David to start digging in about our topic today. So David, can you tell us about yourself and what we're going to be talking about?
Sure. Galia, thank you. And thank you to Aharoni Business Law for this opportunity. I really appreciate it, and the kind words, very appreciated. And it's a two-way street. It is a two-way street. It always is. And it's the ABC, I call it, the attorney-broker-client or attorney-broker-customer relationship. This is very important. And these days, you don't think about working with an attorney with your customers, but when you do, you get the best of both worlds. You're getting advice from both ends. Yeah. It's so important. It's so important. So thank you for that opportunity, Galia.
Happy to have you here. Thank you. I'm going to turn off my video so everyone can look at you instead of me. But
if we look at the first slide, we'll look at, oops, sorry, can we go back one, Galia? Okay. Can we go back one, forward one more? There we go. Oh, we missed one.
Sorry, I'm not sure which one you're. This one?
There we go.
Okay.
Yep. So just really briefly, we're, as Galia mentioned, a privately owned independent property and casualty insurance brokerage firm, which means we work and get paid for by the customer, our client, through commission. And we work with every and any insurance company on the planet. There is no impediment to who we can work with. If it's there, we'll find them and we'll use them. Predominantly, we work with small to medium-sized businesses under 100 employees. Some areas of expertise you can see there. It really runs the gamut of property and casualty, very general term. But one of the highlighted areas we're working on a lot these days seems to be cyber liability, and we'll talk about that a little later. And of course, there are certain questions regarding property and business interruption. Again, we'll talk about it. And some of the segments, we work with a lot of consultants. We have a substantial nonprofit book, real estate owners, managers, and lately, I think cosmetic manufacturers, we have about five of them now. And once you have one, that's great. 2, you become an expert. 3, I think you have a program. So it's been a lot of fun on that journey. So let's look at the next slide, and we'll dive into some of the big picture issues. It's interesting. COVID-19 has really impacted the insurance industry in a profound and big way. When we're talking about some of the losses, Lloyd's alone out of London. Lloyd's is not an insurance company. Lloyd's is just a meeting place for insurance companies under the umbrella of Lloyd's to get together. They're talking about, this was as of end of May, they're looking at about $4.3 billion in losses related to COVID. And we'll talk about the losses and litigation issues later on. but it approximates to, as you can see here, the loss from 9/11 and various catastrophes overall within the US. That's a substantial amount of money. There is an impact for this because insurance companies haven't budgeted for this. When they're thinking about their 2, 3 year, 4 year, 5 year picture, they're buying reinsurance to cover their losses. They're not thinking about COVID-19. It was not on the radar. So they're getting hit. In addition, the current market conditions mean that there's no investment income on the back end. And so insurance companies, famously, of course, when there's no money coming in from investment income and dollars are going out in claims, that means there's pressure on rate and pressure to write business at a reasonable price. So we're seeing rate increases in the market tightening. And of course, that ultimately results, as we know, in lawsuits and changes in legislation, which we'll go into a little later too, particularly regarding business income, which is a very, very hot topic of business interruption. That is the elephant in the room for sure right now. So let's move on to the next slide, Galia. Thank you. Very briefly, this is a picture that was taken as of May, and these are rolling numbers. So for at the top, you look at the property, that's the physical building aspect of insurance. The middle is the third-party liability renewal trends, pricing trends. At the bottom, professional liability, that's errors and omissions, professional liability, directors and officers, crime, and cyber liability. And you can see from November onwards that spike. It really is November, December, the spike is there. Prices are going up, markets are tightening, and it's not a pretty picture. And I don't see it changing much. There is maybe one exception in the workers' comp world, but that is, as we know, is driven by, there's rate driven to a degree, but also payroll driven, because that is one of the factors in coming up with premiums. So as layoffs are happening and furloughs are happening, payroll is going down, so prices are going down overall. Thank you, Galia. Let's look at the next slide. So let's look at the first business segment. What I want to do is go through various business segments and small businesses overall. Under 100 employees, premium under 25,000. There are some trends going on there right now for sure. What we're seeing is insurance companies are, as we said, tightening down. Over the last 12 to 18 months, there's a sort of move for improved profitability, as insurance companies euphemistically call it. There's some more push for these rate increases and tightening of underwriting guidelines. It's very interesting because what insurance companies are looking at now is saying, stay with us, we'll help you, don't move, and we'll try and help you with the pricing too. From a broker perspective, that's very interesting because it limits us a little bit from the standpoint of, do we or do we want to move our customers to another insurance company? And some cases it makes sense, but a lot of times right now in this market, it's difficult because the pricing might be a substantial increase. But also there are things like surveys. So an insurance company will want to inspect certain cases. And it's one of those, maybe the devil you know is better than the devil you don't right now. And I think that's across a lot of the business segments. So insurance companies really are trying to hold on to business whilst getting a reasonable rate increase. But if you move, previously would be one of those, well, we want to buy the business in, we'll go cheap, and we'll try and get that customer in under our tent. Those days are changing. And along with the capacity and pricing, insurance companies are saying, as I said, the costs are going up, but also their capacity, their reinsurance deals, those prices are increasing because reinsurance costs are set up beforehand. These agreements are set up beforehand, and insurance companies have to live with them. So if reinsurers are taking a hit because they didn't see COVID-19 either, then they're looking at, of course, adding a substantial rate increase to their pricing to provide reinsurance for the insurers. So overall, let's just say insurance brokers like myself are having to change the way we service our customers right now. States have started to lift some restrictions. They're coming back on again. We've seen that. So we're having to modify how we work with our customers and give them advice that's slightly different from where it would have been 6-8 months ago, which was let's shop it and let's talk to underwriters, let's talk about new relationships. What we're talking about now is maybe let's work on existing relationships and see if we can leverage that. So thanks, Galia. Let's move on to another business segment. The hospitality world. Oh my goodness. I mean, do we all miss going to a bar, a restaurant, or just getting out of the house and meeting friends? We certainly do. Of course, those businesses, the hospitality businesses, hotels, motels, restaurants, bars, and taverns, are hurting so badly. We work with many, many bars and taverns, and we've lost several. They have just gone away. The money isn't there to sustain their business right now. No income. Maybe they're not selling food, so just the alcohol side is just, it's killed them. It's a very, very sad situation. And of course, exposure changes. If you're a bar, it's sitting empty right now. And it's sitting empty from sun up to sundown, which means it's an attractive nuisance for arson, break-ins, thefts, all sort of things that insurance companies fear. When they're writing a bar, they're looking at the liquor liability, slip and fall, somebody hurting themselves, or suing the bar for chucked out on their ear, or whatever you want to call it. There are exposures, of course, from a bar or restaurant perspective, but when it's vacant or it is used in a limited capacity, insurers are looking at that and saying, if we want to insure it, we need a substantial price increase, rate increase. And on top of that, exclusions are being added. Normally, coverage would include, assault and battery coverages for within a bar, and it's a tough coverage, but you can get that coverage where a claimant says I was assaulted whilst being removed from the bar, or it wasn't my fault in an altercation at the bar. Those are very, very difficult to get now. Insurance companies are trying to strip those right back to the bare bones. So overall, due to the change in revenue, if they are renewing, lower limits are being purchased. Some have let coverages lapse. They're trying to lower premiums, but it's difficult right now because insurance companies see a substantial exposure change in this world. And whereas before, we looked at a bar and said, wow, what a cool place to own. Wouldn't that be fun? I don't think so anymore. It's a tough world. So stressed sector for sure. Thanks, Galia. Let's move on to the next segment, which is what I call tech and consultants E&O. And self-employed consultants and those in the technology field, maybe IT consultants, things like that. It's always been a difficult segment to work with in general because there are so many people who are not necessarily niche businesses or niche businesses. They spread themselves across various business segments themselves. So when we're working with consultants, we have to be not careful, but we have to make sure we get the right story when we place them with insurance companies. And this world is starting to tighten up, particularly in the professional lines where we're looking at professional liability or errors and omissions, which a lot of consultants purchase. It's not as straightforward or as easy as it used to be, whereas before, we could quote our own terms, we could talk to insurance companies. Now it's proving tough, and even some markets are declining to quote consultants. And there are a couple of online markets out there like Hiscox who are still, happily looking at business. So they're starting to tighten down a little. Yeah, they're willing to write consultants as they did, I'd say 6-7 months ago. So far, so good. We'll see if they start to have losses. There's a loss trend there. Then we'll have to reevaluate that. But right now, for this segment, we're looking at about 10% to 25%, maybe even more increase. And there's very little terms for negotiation right now. That's what we're finding across the board. It's sort of my way or the highway from underwriters. And to be honest, they've been looking for this for a while. It's been a very soft market. It's been dictated by the buyer, and negotiations were pretty easy. If you don't want our business, somebody else will. And that's changing. It's becoming a more difficult marketplace. So again, it comes down to sticking with the incumbent, maybe. having a look and see where the negotiations can be made with your current market. It's a trend that we're starting to become more accustomed to. That doesn't mean you can't look and can't talk to other insurers, but at the same time, staying close to home might be better. So if there is a claim, you might have more leverage right now. And it's, you know, do we want to change for a normal amount of money in this marketplace? Probably not. Thanks, Galia. Let's move on to tech and cyber liability. This is a very, very fast-growing area, as we all know. We hear about all sorts of hacking issues, financial loss, phishing. It is a fast-moving insurance product as well. In fact, UIB Insurance put together a white paper about a year ago, which I'm happy to share with anyone in Galia. I'm happy to send that to you.
Yeah, that'd be great. Thanks.
Yeah, happy to put that up on your website. It really is something that is taking over, and everyone has questions about it. What do I need to worry about? I don't have an IT department. I don't have a risk manager. The HR person is working from home on their computer. So we've had customers who had employee listings with social security numbers on laptops that were stolen. We've had CFOs who have been told to move money. Throw in the COVID-19 disruptions right now. You can imagine with employees at home, or managers, or owners at home with your laptop or your computer on your desk, on your dining room table, wherever it is, in your home office. It's not the same as the office. You don't feel the same security as you do there, or employees are at home with their own laptop. What sort of information is out there? It's interesting, with the majority of Americans working from home, I mean, the increased pressure to maintain the accessibility is substantial. And we're seeing those cyber attacks, and it should be a key component of your risk management approach to your company, protection of your company. It's a really tough time with those markets too. Cyber liability markets were, again, one of those, let's go shop it, let's talk to everyone, let's look at the coverages, what do we want, pick and choose the various sublimits. It's getting tighter as we're seeing claims, and claims are happening in this area. Unfortunately, the bad of the world out there is looking at COVID-19 as an opportunity to do some terrible things online. And I mean, it's not just the financial, it's the reputation loss too, and the intellectual property loss potential. And those things can result in fines. So we're happy to talk to anyone about this area. It's, as I say, fast moving, but insurance companies are starting to tighten down on pricing and coverage. But a robust cyber liability insurance policy should be part of your risk management approach. Thanks, Galia. All right. So directors and officers insurance. We work with many, many nonprofits. And, when we sit on if you sit on a nonprofit board, that's a wonderful thing to do. Altruism, God, yeah, my hat is off to you. I love it. I sit in a couple of them myself. It's important. It's very, very important to be part of the community. However, being a director, particularly on a board, means that you're personally liable. If something happens and the board gets sued, it is your back pocket that's going to be raked through for any damages and legal costs. That's why the directors and officers policy is there, to be the deep pocket, so that you are not, and that your house isn't tagged or your bank account isn't emptied. So D&O is very, very important coverage. We have a few clients that are also publicly traded, and again, of course, they're buying in the $50 to $100 million limits, and it's substantial premium. But what we're seeing here is that claims costs and frequency of loss are really starting to creep up. And insurance companies are noticing that they've got to increase their deductibles or retention levels. Some of these small nonprofits are $1,000 or $2,500. So submitting a claim seems like an easy thing to do if there is a loss, because they're out of $1,000 out of their pocket. That seems a nice trade-off. But when an insurance company says your deductible is now $25,000, they start to think twice, which means that the governance, internal governance, becomes important, as well as the general housekeeping of the company, of the entity. And insurance companies are trying to drive that right now because they are seeing losses. Capacity as well is interesting. Limits are being reduced deliberately by purchasers because they're saying, I can't afford 3 million anymore. I can only afford 1 million because the price is going up. And the pricing is, we're seeing 25 to 50% increases in certain lines of directors and officers coverage. It is such a key policy for those that require it. And in addition to the indemnification language that a company would offer the board of directors, the way to obviously to fund that is through this policy. So very, very important. And recent losses, I mean, some of the trends out there from the large litigation, the Wells Fargo type losses where we're seeing hundreds of millions of dollars in claims being made, does trickle down into the small business segment. Insurance companies are looking to save where they can, increase deductibles, and the pricing is reflected in that. So we have 2 or 3 markets that are still reasonably competitive, but they, again, like to keep their business. And if they're looking at new business, we've got to tell the right story, which is very important overall, that the story is told. Sometimes we have the owners of companies on board to talk to underwriters. They tell a better story than I can. Sometimes that makes a lot of sense. So again, it's a segment that's starting to see some real pricing and capacity issues. Thanks, Galia. Let's move on to employment practices liability. Well, this is one of the coverages that can be purchased on its own or in conjunction with a directors and officers policy for a privately held firm. And it's an area that, again, we're seeing substantial claims. Not only wage and hour losses, which I'm sure Galia could talk ad nauseum about right now. There are a lot of wage and hour losses, and but right now, when employees are being laid off, furloughing going on, there's a lot of distrust, a lot of unhappy employees, and they're looking at not necessarily targeting their employers, but saying, was I unfairly targeted? Was I discriminated against? And we are seeing many claims coming in this area because of this. Price increases, deductible increases, substantial changes in wording, where before we thought we could get wage and hour coverage. Sometimes it's just not available. Losses from wage and hour claims. This is coming down to telling the right story, having a good track record on onboarding employees, how that happens, having employees that are part of a team or community at work. It's very difficult to talk to an underwriter right now without having that great story on why this is a very, very good risk. Because they can pick and choose. Insurers can pick and choose the employment practices risk they want right now. It's not surprising, the significant exposures that are faced. You can just see them here, the discrimination. I mean, in addition, we haven't even talked about HIPAA regs too. If you've got an employee who's contracted COVID at work, what do you do with that information? How do you handle it? Where do you keep it? Who do you talk to? Do you talk to your work comp insurer about this? Can you? What do you do? You need a good attorney. You really need a very, very good attorney when you're talking about employment practices situations. And of course, as I say, insurance companies are reluctant to give legal advice. They don't want to do that. They also want some of their insureds to consult with an attorney prior to any layoffs, so they've got everything dotted and crossed before they do that. And sometimes when a company is forced to lay off or furlough employees, they want that consult not just with an attorney, but an employment attorney, so the proper procedures are followed. Waivers released, absolving the company of liability. It's a very, very fast-moving, changing landscape in the employment practices world right now. So my advice is, if you have employment practices coverage, try and keep what you've got. Talk to your attorney frequently about if there are layoffs coming down, or even rehires. I mean, the city of San Francisco is talking about rehiring. In fact, I believe they passed legislation on that at city level, where those who are furloughed or were let go have to be rehired first or offered the job first. So again, changing landscape and things we haven't seen before. Very interesting. Thanks, Galia. My goodness, talking about from the frying pan to the fire, employment practices to workers' compensation. It is a very, very fast evolving, moving landscape as well. As we know, workers' comp is a no-fault coverage. An employee has an injury at work. Is it job related? Yes, it is. It is compensable, and there are very few questions asked. Beyond fraud, we're not going to talk about that. But the burden usually falls on the employee to prove an illness. If it was work-related, then the insurance company steps in, and usually there's no questions. What is interesting right now is that, as I said at the beginning, this industry still has reasonable pricing, and the two reasons for that is there is a lot of work comp capacity out there, and right now there is what I'd call a race to the bottom. And I've seen this cyclically in this industry for a very long time. I've been working in the insurance industry for almost 34 years, and 20 or plus of those are in the US. And I've seen insurance companies come and go, at least a dozen bankruptcies, where there's a race for market share. And we're seeing a race for market share right now in the workers' comp world. Rates are pretty soft. And so if you can get market share and survive something, with your competitor, against your competitor, then you're hopefully going to put them out of business, and you'll have enough jammed in the funnel to pay for losses that are going to happen later. But of course, nobody expected COVID-19. So insurance companies are still in that race to the bottom. At the same time, premium is not coming in because employers are saying, hey, I don't have 2, 5, 10, 200, 500 employees. I have 1, I have 3, I have 7. I think it's cut in half. So of course, payroll is reduced, and payroll is part of the premium computation. So ultimately, premium is down. So insurance companies' income is down, and all we're waiting on now are the claims coming in, which they will happen. And legislatively, it's been interesting. We'll talk about some of that later, but purchasing behavior overall, as I say, that cost is down. And if you think about some of the classes like tourism, hospitality, retail, they're just gone. They're closed. So insurance companies that were focusing on those classes of business are not bringing in money right now. We will see prices increase, I think. I really do. Once those claims start to be paid. And we can talk about some of that later when we get into work comp legislation that California in particular is enacting. It's very interesting, for sure. Let's move on to some of the claims litigation and legislative updates. So the question we get asked a lot, and as Galia said, she gets insurance questions all the time, is where can I buy coverage for COVID? What do I need? COVID seems like, is it insurable? And do I have coverage under my current policy? Well, the answer is no and yes. We could just leave it at that. I mean, that makes sense, right? So if we think about it, property coverage, let's start there. You have a bar and you're closed because, there's nobody there. And you've been told to close, the government's got an order out, local or state-wise, you can't open. What do? Can you claim business interruption? Business interruption is where you have made money in the previous year, hopefully a profit, and you have other, other significant costs, payroll, sales tax, other taxes from local and state, Fed, and so on, that you have to pay, standing charges, electricity, PG&E, and so on. Those are all costs of running a business. And if you can't run that business, you want to be able to recoup those costs. And under a business interruption coverage as part of the property policy, usually if there's something like a fire, then you go back to a previous year and say, this is what we made last year. Here's our books to date. So we're out of X amount of profit. We've got these additional costs and so on. And the insurance company looks at those and says, essentially looks at receipts and says, yeah, that makes sense. We'll pay you your loss of income for that period you're out of business. Say you're out of business for 6 months. We'll pay you for that. And that all sounds good, except in property policies, there has to be physical damage. So can a virus cause physical damage? Well, yes, it can. Your countertops could be infected, but that's, bleach in a cloth and hot water takes care of that. So there's no physical damage to the property, really. In addition, most policies have a big fat virus and bacteria exclusion. That's been there for a while. Not necessarily a pandemic exclusion, which we're starting to see on policies now, as of the last month and a half. So the property policy, if everyone thought they could actually make a claim under business interruption, is not there. Now I believe there's a class action lawsuit being put together by certain bars and restaurants in California and beyond now, and it's probably going to go all the way up to appeal court level for sure. It's worthwhile keeping an eye on, saying that insurance companies need to pay out under their business interruption policy. And we'll see where that goes. The California Senate has an amended bill, AB 1552. I'll read a little bit here about it. What they want to do is rewrite any commercial policy covering business interruption to create a presumption such a loss was due to COVID if there's an order by the Fed, state, or local government to prohibit the coronavirus from being considered a pollutant or contaminant, unless the policy language specifically excludes pandemic, which we said previously it doesn't. So if there is that kind of exclusion, what they want to do is try and apply retroactively for any business from March onward, and make an interruption claim viable. Of course, insurance companies are fighting that tooth and nail, and that's going to be a big battle royal for sure. And I don't know how that will end. My guess is, insurance companies will fight that so hard that any legislation will be watered down if it does go through. Or insurance companies could go belly up from that. I mean, we're talking potentially across the US, trillions of dollars of business interruption losses, not billions, but trillions. And that will have a lasting effect. So we're watching that carefully and see where, and of course, as California, as always, is leading the way in a lot of that. So we'll see where that goes.
David, can I ask you a question about that? So if someone isn't sure whether their business interruption insurance would cover them, let's say they're in a gray area or they just don't know if it does, what do you recommend they do in that situation?
So there are two things you should do. Talk to your insurance broker and your attorney about the policy wording. What does this look like? And two, always submit a claim. Submit a claim. Nothing wrong with putting an insurance company on notice that you believe you should trigger the policy. That's okay to do that. That's what the policy is there for. And if the insurance company comes back and said it's not covered because of A, B, C, and D, then let's have that conversation. So Galia, you and I maybe have that conversation about what does that exclusion look like? Are they right? Are they wrong? Do we push this further? And do we have an argument against that? And the business interruption one is difficult because the policy clearly states physical damage has to occur. And it's difficult to argue against that right now, but that doesn't mean that there isn't a smart attorney out there, Galia, right? Who can find something and say, hey, yeah, well, so that's physical damage. What about this? So, we're kind of, it's again, a moving target right now for buyers of insurance because they don't know if there really is coverage under a virus or pandemic. And of course, we're starting to see, I believe AIG Insurance Company has started one of the first pandemic exclusions already. It's the COVID-19 exclusion. If you remember Y2K insurance policies, in just before the millennial change, 1999, there's just panic, and Y2K exclusions were put on every policy, every single policy, from homeowners to crime policies, you name it, things you wouldn't even worry about, and nothing happened. But to this day, you'll still find Y2K exclusions on policies. So the insurance companies are very good at excluding things where there's panic and fear, where they can't quantify it, and they can't actuarially look at this and price it right now. So one area, interestingly, that there are no exclusions like that would be special events policies, just as an aside. So you have a wedding, you have a party, an engagement, bash, or something going on, and you buy a special events policy. It's pretty broad and says if that policy is canceled, we'll pay out the money. So it's a one-off, those are one-off deals, but it's interesting looking at that. If you were smart enough to buy one of those, and they're fairly cheap, then there have been payouts under those policies. It's very interesting. Under the general liability side, that's providing coverage for bodily injury or property damage caused by your business operations or products or injury that occurs on the premises where you're legally liable. If you think about that, could you as a business have a failure to protect an individual or their property against infection? A hospitality venue or a concert hall or a restaurant? It's possible, and there are virus exclusions on those policies too. But we are seeing a few claims that insurance companies are humming and hawing over right now, thinking, do we have coverage? Is there coverage there? And it's difficult. It's difficult because the standard general liability policy doesn't exclude coverage for such diseases necessarily, but we're seeing examples of exclusions being added right now. Communicable diseases, or something under the pollution exclusion, which is very interesting. And insurance companies are using the pollution exclusion, saying that, well, COVID-19 is a pollutant, isn't it? The stretch is far, but insurance companies don't know what to do about this. They are scrambling to figure out if there's coverage or not as well. And we know insurance companies really always want to pay, I'm sure, always. But we're working hard for our customers to, when we put claims in, to follow up and make sure that if there is a denial, that there is something substantial there, and it's not just denying because we're saying it's denying. We have a claim right now where it's under reservation of rights situation, and insurance companies considering it. So we'll see. That's a good first step. So they'll pay the claims costs right now until they determine the actual coverage. On the professional lines, this is an area you can include hospitals in this too, with medical professional liability. Care facilities, front line of handling patients infected with COVID-19, my goodness. Would you have a lawsuit for failure to protect patients, misdiagnose health practices, quarantines, ceasing operations due to an outbreak on premises, and so on? It's a tough one. And we talked about the hackers situation earlier. Tricking people into clicking news links and malware downloads. All of those things are going on. So the employment practices world, directors and officers, we are seeing claims. We're seeing claims, and I haven't seen anything paid out yet, but I'm seeing claims that are being investigated. And we're starting to see exclusions on D&O and E&O by endorsement. So we anticipate a great deal of change in the liability and professional lines area over the next 60, 90 days, about substantial changes. As policies renew, those exclusions are going on, which doesn't surprise me right now. On the workers' comp side, it's kind of interesting. This is where we talked about the fast-moving landscape. Early this year, Governor Newsom required those who are essential frontline workers, or those who are forced to work away from home and are sickened by COVID-19, they'll get the benefit of the doubt when filing a workers' comp claim. So, basically what will happen is those claims will be compensable with no questions asked, and the claim has to be accepted or denied, in most cases accepted, within 30 days. Normally that deadline is 90 days for an insurer to say, is that a work comp claim or not? Is it compensable or not? It's now 30 days. So that window runs from March until July, just closed on July 5th. In saying that, the workers' comp industry in California alone is looking at COVID losses around about, we're projecting for the next year, $11 billion in losses. I mean, the workers' comp business is, of course, is a substantial premium generator because by law, you have to purchase work comp. If you have an employee, you must buy workers' comp. What's interesting, though, is that there are changes moving right now. The California Senate just voted in favor of a measure that would require employees in essential industries to tap paid leave benefits first before they make a work comp claim. But the work comp claim then would be accepted at that point. So it's sort of a hurdle to get over before you get to the work comp claim itself. So, the legislature is looking at ways to help, but at the same time, not bankrupt the industry. I mean, just to show you how big the industry is, every year in California, there are $2 billion worth of fraud claims, $2 billion in fraud claims every year in the California system. It is a massive, massive money generator for insurance companies if they get it right. And nobody expected COVID-19 to happen, of course. And so the legislature is trying hard to kind of balance that up right now. It's moving. It's worthwhile watching this area because it is changing daily, for sure. So moving on to my last slide is interesting what's happening federally. After 9/11, insurance companies realized that they did not have the financial capacity to pay for a terrorist act. If something happened, they just did not have the money to pay for those kind of losses. And so the federal government came in and backstopped insurance companies called TRIA. And some of you will see on your insurance policies that terrorism coverage is either you have to purchase it separately or it's included in your policy pricing. The Terrorism Risk Insurance Act was the act that was passed at the time. So there's been an update on that from the COVID side of things, which has been put forward by a representative in New York who has saying that, why don't we model something on the TRIA Act, the Terrorism Risk Insurance Act, from a pandemic standpoint and say, maybe we need to put a federally funded backstop together and look at this and say insurance companies cover it, and particularly we're talking about business interruption, workers' compensation, employment practices where we're seeing losses, cover it and we'll federally backstop you. Now, nobody really knows what that means. What kind of money does the federal government have that kind of money right now? How would they raise that, billions of dollars to federally backstop that, like TRIA? And similarly to the National Flood Insurance Programs, kind of similar to that too, the NFIP. And so there'd be some kind of financial limit on it, and insurance companies would then kick in above that, or be integrated as we haven't, nobody's really figured out what that is. But I've got a feeling this has got some legs on it right now. And, as we're seeing no end to this pandemic in the US, I think this will be something that will be seriously considered. If not by this, within this legislative session, I think the next one will definitely, there'll be continued discussions about this. It's very interesting. So that's my talk on the world of insurance and COVID. It's changing landscape, as I said, but don't be afraid to talk to your broker. Don't be afraid to talk to your attorney. Your psychologist is a good place too. And if there were bars, we could go there and commiserate. We can't do any of that right now, unfortunately. Prices are going up. Deductibles are increasing. Sometimes the devil you know is better than the devil you don't. And have those conversations with your trusted advisors. It's very important.
Excellent.
Thank you.
Thank you so much, David. I know that answered a bunch of my questions, so I'm sure it was helpful for everyone else watching too. So we can keep it open for a couple of minutes if anyone has questions coming in. But in the meantime, can you let us know how to contact you? If people have follow-ups?
So in the last slide here, you can see we're Oakland based, but we have customers from my home country in Scotland, through France to Canada, from Boston to San Diego. We work globally. Our direct number is right there, 510-927-2102. My email is there, dforsyth@uibinc.com, and check out my website as well.
Awesome.
And one last thing I was going to say, our goal is what I call my safe harbor. Put our customers in this safe harbor. You don't have to worry about insurance, allowing you to concentrate on your business. Don't worry about risk. We'll help you concentrate on what you do well, and we'll concentrate on what we do well.
Excellent.
Thanks, Galia.
Yeah, and so again, here's my contact info if anyone needs it, mostly for the recording. We are recording this, so if anyone wants to watch it again later or send it to anyone, the easiest way to be alerted for that is to go to our website, aharonibusinesslaw.com, and sign up for our newsletter, but we'll also just post it on our Facebook and share it on our website and things like that. So thank you so much again, David. This was incredibly helpful, and really appreciate your time. And I don't see any questions coming in, so we can wrap up. But thanks again. And hopefully we can do this again sometime too.
Cool.
All right. Have a good day, everybody. Thank you.